Ethereum Classic is about to roll over, and it's very likely that it's going to go below $30. Today, we're going to do an update from our 30th of July Ethereum Classic analysis to see how it's really unfolding, so we can keep really 2 steps ahead of the market so we can make high probability decisions. So let's dive straight into Ethereum Classic. So this was the video on the 30th of July, end of a micro trend. And what we said was we should anticipate with pretty good confidence that we've got some type of 1, 2, 3, 4, 5, end of a 5-wave sequence. We should anticipate some type of A, B, C correction into this range. So now what we're going to do is an update with Ethereum Classic, see how it's unfolded, and really paying attention to the detail, So here's Ethereum Classic, and here's the analysis that we did on the 30th of July. So we just need to update it. So first of all, what are we seeing over here? Right, well, we've got this 1, 2, 3, 4, 5 that we saw before. It looks pretty clean, pretty clear. We've had this initial move down, but this high has taken out this high. But we want to know, what is this? Does this look impulsive or does it look corrective? Well, to me, it just looks like a 3-wave structure. So it looks like a nice wave B. And in advance, we don't know how the Bs are going to unfold, but it looks like it's making an irregular wave B. By the way, if you want access to my charts, my exact charts, I do use a 4-chart template with a particular settings, weekly charts, daily, 4-hour, and 1-hour. You can now get it for free. It's in the description link below. Get my charts. You can view only, so you can see them, but you can also upload them yourself into your own TradingView account. And Ethereum Classic has now been added. There's a few others as well that you can indulge yourself with for free, so you can use them. So what we're seeing over here, you have the exact same information. So what we're going to do now is just going to update this wave count. So this looks like that initial wave A that we're looking for. This looks like that wave B, even though it's irregular, as in it goes slightly higher than the former high. That's one of the ABC zigzags, but it's an irregular zigzag where the high goes above the previous high. So what should we anticipate? Well, at the beginning, we said it's likely to go below $30. Why? Well, it's because normally corrections occur in a minimum of 3 waves. So we've got this first leg, we've got the second leg, and we're looking at this third leg. And the third leg, typically, more often than not, goes below the wave A. So we just keep it really, really simple. Really, really simple. And by the way, if you're brand new to Elliott waves, I get it. It's not easy, but everything is difficult before it's easy. I'm actually going to read you a quote from my book. It's just kind of drills this point home. It's Confucius. It does not matter how slowly you go, as long as you do not stop. So it's practice, and repetition. So what we're going to look at is, let me just zoom out over here, is this part of the market. What is it likely to do? Let me just clean this up a little bit. We've got a bit of price and a few other piece of information here. But what I want to show you is this. Let me show it to you like this to make it really, really clear. Let's just clean up the whole chart, keeping it really, really clean. What we want to be aware of is the relationship between this wave, which we're calling the wave A, and the third leg, which is wave C. And the in between is the wave B over here. That's what we got over here. That's what we're looking at. Now, the relationship between wave A and wave C is most common. They are identical to each other. In other words, the price range of wave A is often equal to the price range of wave C. And the typical maximum of wave C is 1.618. Because what we're doing here is measuring buying and selling behavior. So what we're going to do is be able to have now a higher probability of a zone that Ethereum Classic is likely to go to. So if we just now bring up that data again, I'm going to show you how you can really leverage this information. Oh, let me just make sure I got this correct. I want to bring back my drawings. Okay, it's not bringing back my drawings. Okay, I'll do it this way. Here's the crass way. All right, here we go. Here's my drawings. So what we're going to do is we've got this time and price zone. This was based on this information. But now we're going to add to it by because we got this data now, and we've got this, what looks like to be a wave B top. By the way, it's good practice to just put a question mark here to remind ourselves we can only do probabilities and never certainties. And these are high probable outcomes, but never certain outcomes, if that makes sense. All right, so I'm going to do something called an alternate price projection. We're going to measure the price range of wave A. We're going to project it from this top. And there's really two ratios that we want to be aware of. The 100% as what we said, and more likely is going to be the 1.618, which is a typical maximum. So what we have is really two zones. We've got this zone over here, and we've got this zone over here. What happens more often than not is price will reach the first zone, but if it exceeds the first zone, it will typically find the next zone. It's like magic. It's like having a crystal ball. It's not a crystal ball, but it's like having a crystal ball, and it's almost like a magnet. And you'll find this happens time and time again. We can also now do a bit of advanced time analysis, right? Another thing that most people don't realize, again, I'm going to show it to you like this, if it lets me do it. Yep. Is you can measure time. You go, what do you mean you can measure time? Well, markets tend to move in rhythms and cycles and trends and so on and so forth. And the way we measure price, we can do the same for time as well. And what's most common is the length of time it takes this wave A to form. So in other words, there was 1, 2, 3, 4, pretty much 5 days. 5 days, more often than not, will be the same time taken for a wave C, or 1.618 of that time. That's some Fibonacci ratios. So you go, okay, how do we use that information? Well, what we're going to do, the chart analysis and come back up, we're going to measure wave A, we're going to project it forward, and the two ratios that we want are 100%, which is represented by 1, and 1.618. Right, so we've got these two ratios. Now it's right in the middle of this cluster zone, so we don't need to really adjust anything too much, other than, let me just double check we got this right. Yeah, it's just something to be extra aware of. So we've got the broader extremes, the minimum, maximum, but when we're really aware of this zone over here. So if Ethereum Classic goes into this zone or overextends into this zone, we're going to be on high alert. Why? Because typically what unfolds next after a correction, I'm just going to change this to green so it matches up. We'll go with this green here. Oh, go with this green. Let's just say this unfolds. What will typically occur next, in fact, let's be a bit more conservative, say $29. What will typically occur next is a continuation of the former trend. What's the former trend? Well, is this movement here. And you'll get, more often than not, a continuation, but an expanded version of this that's more impulsive. So with Ethereum Classic, want to be aware of a few things right now. Is the momentum position, which you haven't spoken about yet, is bearish, meaning the blue and the red line are pointing down. What that means in English is the momentum's to the downside. So there's pattern, there's price, there's time, and there's momentum that's telling us we should anticipate sideways to down for a few days, but potentially just finishing off a correction. And the way I like to think about it is that the market's just done a nice sprint, like it was running a race, and now it's in a recovery mode. Recovery mode, getting its oxygen back, breathing, oxygen debt, paying off that debt, and now at this point is getting ready for the next sprint. And we want to be in high anticipation for the next sprint because you want to be at the beginning of the next sprint. So I'm going to finish off. I'm going to loop my quote. By the way, if you want to get a free copy of my book, you can now download it for free. I want to loop this because we covered a lot. That was advanced stuff that we covered today, but everything is difficult before it's easy. That's just life, but it's worthwhile learning these things. And if you want to, you can actually join my private community. There'll be some links below as well where you can find out some more. So I'm going to repeat this quote. Every chapter starts with a quote. I love my quotes, but it's the practical application of the quote that's more exciting for me. And here we go. It does not matter how slowly you go as long as you do not stop. That's Confucius, my friends, Confucius. So if you like today's content, like, subscribe, hit the bell notification. Always, always, always remember, especially when trading, the trend is your friend. Ride it until its end, until it reaches its bend. So with Ethereum Classic, we've had this 5-wave movement up. That's the end of the trend. It's looking like it's reached its bend and it's doing an ABC correction. If it does that ABC correction and it unfolds as anticipated, that'll be the end of a corrective trend. And now we want to get in at the beginning, near the beginning. We want to get some confirmation and then ride the next new trend as well. But it might take days and weeks before that unfolds. So we want to be on high alert. There's a few other factors that we'll look at as well. So yeah, download the chart, use it, see how you find it. You can get all the momentum indicator settings as well. It's free. It's in the description link below. And I will see you tomorrow.